Hi, welcome back to my final morning report. Charles Perry on Monday, the 4th of July, with me, Richard Perry, market analyst at Antec Markets. Let's look at gold as my final chart. And we've pulled higher again. It looks like we're sort of having a big go at this 1358 post-Brexit reaction high that we saw a couple of Fridays ago. 1357.60, so it was the high today so far, just slightly backed away from that 1351, around about where we are now. It certainly looks as though this is a positive move, and you've held on to this 1306 breakout, so that is certainly a strong move. You're seeing the RSI up at the highest level since March now, so again that reflects the strength that we're seeing. We're seeing a trending move, we're seeing strength through the momentum indicators. Our MACD lines are also agreeing that March breakout, and also stochastics are rising strongly, so it's pretty much across the board very decent looking move on gold. Whether it will continue, I think it probably will. I think it will continue above that 1358 level, and I'll sort of go back a couple of years to see the next real resistance, which comes in at 1391, if I can get my crosshair on it. 1391.76 from March 2014. So there is still further move to the upside, I think, and that is the, sort of the next resistance. I mean, you sort of look at this strong run we saw through January and February, where we saw the RSI up at 86. Not a dissimilar move, although obviously we didn't have that sharp correction. That correction then sharp rally. So I still think this is a trending move, and I still think there is further upside in it. I don't necessarily think that 70 is the limit on this RSI move, because that would suggest that it's a range play, and gold is certainly not a range play, having broken out above 1306. So I think now we're looking at gold being a strong trending move, and I'd go with the trend. I'd go with the run, and use any sort of intraday weakness, I think, as a chance to buy. You've got the hourly chart here. Got the fib retracement levels still in place. 23.6 was holding us back for a little bit, and you've broken above that, and it sort of reopened the highs again, and almost got there, but just sort of tailed back a little bit. But still, you're trending higher, I think, on this on these sort of sequence of higher lows in the last sort of few days. I think there's some decent moves to be had still. 1337 is the initial, 1338 is the initial sort of support, and that sort of coincides, or certainly today's low, and that sort of look back at 1335, which was the initial resistance. So it's sort of mid 1330s would seem to be a fairly decent support area, I think, now for a near-term dip, or these minor resistances that broken through become supports now. So I think your 23.6% fib level is a pretty decent gauge now for a little buying opportunity. But ultimately, I think it's going to break above 1358, and then that, as I said, reopens 1391. So I wish you good luck in your trading today, and I'll speak to you again tomorrow.